Hey guys, I am Deric. Welcome to my channel. In this video, I'm gonna explain to you the legal forms of business organization. There are three common forms of business organization, including sole proprietorship, that is one-person business. Partnership, a group of people, like friends and family, doing business together. Corporation, basically a big company that is allowed to sell shares. Under sole proprietorship, it has no legal status, which means the owner and the business are not separated. Owner is the business is the owner. Anything good or bad happens to the business will affect the owner. Maximum owner allowed for sole proprietorship is only one person. It cannot have more than one owner. Sole proprietorship has unlimited liabilities, which means if the business is not able to pay back a debt, the owner will have to use his own money to pay for the debt. If the business is bankrupt, the owner may become bankrupt as well. Next, all the properties and assets of company are owned by the sole proprietor. And the business is managed by the sole proprietor himself or herself. Termination of the business occurs when the owner dies, or when the owner chooses to terminate the business. For sole proprietorship, there are some advantages and disadvantages. The advantages include: it's easy to form and dissolve. Dissolve means to close. Low organizational cost. You just have to pay less than $100 to register for the company's name. Then you can start your business. The cost of maintaining the business is also usually lower. Minimal regulations and more secrecy. Not many rules or laws you have to comply with, and you don't have to disclose your company's information to the public. So you can keep your own secret recipe. Maintain complete and ultimate control. As you are the only owner of the business, you can have complete and ultimate control for the development of the business. The proprietor is entitled to all the profits. You don't have to share the profits with other people, as you are the only owner of the business. For the disadvantages: first, unlimited liabilities. This means that you will have to pay for all the debts of the company. If you are not able to repay the debts, the company will be bankrupt, and you may go bankrupt as well. Limited fund raising. It happens because you don't have other partners who can contribute money to run the business. Banks might not consider lending money to you if you don't have a good credit record in the past. Proprietor must be jack of all trades. It means you must know everything and be able to do everything for the business. As you are alone, you have to do marketing, logistics, accounting, and finance on your own. The firm is terminated when the proprietor dies. Unfortunately, the business will not continue if the owner passes away. Next, partnership. Partnership has no legal status similar to sole proprietorship, in which the partners and the business are not separated. Partners are the business is the partners. Anything good or bad happens to the business will affect the partners. Number of owners allowed for partnership is minimum 2, maximum 20 partners. Partnership has unlimited liabilities, just like sole proprietorship, which means if the business is not able to pay back a debt, all the partners will have to use their own money to pay for the debt. If the business is bankrupt, the partners may become bankrupt as well. All the properties and assets of company are jointly owned by the partners. Every partner is entitled to participate in the management of the business. Termination of the business occurs when any one of the partners dies, becomes bankrupt, withdraws, or becomes insane. Insane means mental problems. There are three types of partnership. The first type is called general partnership. All partners have unlimited liability. That means all partners will have to bear equal responsibility to pay back the debt. The second type is limited partnership. It consists of one or more general partners who have unlimited liability. Then it will have one or more limited partners or investors, whose liability is limited to the amount of money they invest in the business. The third type is limited liability company, LLC. It is a hybrid business structure, operating similar to a corporation and a partnership. It is like a corporation because the owners of LLC have limited liability, but the firm runs and is taxed like a partnership. For partnership, there are some advantages and disadvantages. About the advantages. Compared to corporation, it's relatively easy to form and dissolve a partnership. Dissolve means to close. Partnership can raise more funds than the sole proprietorship. As now you have more partners, they all can contribute money to the business. The limited partnership permits some of the partners the privilege of limited liability. Under limited partnership, if the business failed and incurred debt or legal problems, the general partners would be personally liable for all the losses incurred. However, for limited partners, their liability would be limited to the amount of their investment in the business. This means that the personal assets of limited partners would not be at risk if the business failed. About the disadvantages. Unlimited liabilities. Similar to sole proprietorship, partners will have to pay for all the debts of the company. If partners are not able to repay the debts, the company will be bankrupt, and partners may become bankrupt as well. Each partner is liable for the actions of other partners. If one of the partners represented the company to do business with the customer, but later on this partner cheated the customer's money. According to partnership law, if the customer sued the partnership company, all the partners would be in trouble. Even though that is not your fault, you will still have to bear the responsibility because of other partners' wrongdoings. Another difficulty is about partnership transferability. If you are not happy with other partners, you cannot simply transfer your partnership to another person. The only way is to end the business. About the termination of partnership, let's say your business has 3 partners. If one of the partners dies, becomes bankrupt, withdraws, or becomes insane, the partnership is considered being terminated. Next, let's talk about corporation. About the legal status, corporation has separate legal entity, which means the company and the owners are separated. If the company is in debt, the creditors can only sue the company, but not the owners. Shareholders are the owners of the corporation. For the number of owners allowed for corporation, private corporation is allowed to have minimum 2 and maximum 50 owners. While public corporation is allowed to have minimum 2 and no limit on maximum number of owners. Owners of corporation have limited liabilities. So, if the corporation is bankrupt, it will not affect the owners or shareholders. The maximum loss for shareholders will only be the amount of money that they paid to buy the shares. They don't have to pay for the company's debts with their own money. This is very different from sole proprietorship and partnership. All the properties and assets of company are owned by the company, not by the shareholders. Because company is a separate legal entity, company is treated as a person. That's why the company can own assets, it can sue or be sued under law, and it can borrow money from the banks. That's what we mean, separate legal entity. Corporation is managed by the Board of Directors, BOD. Directors may or may not be the shareholders of the company. Usually, most of the shareholders are not the management of the company. For the termination of the corporation, it would only happen by undergoing legal winding up. Corporation is assumed to have perpetual succession, which means it can do business until forever. However, if the company is not able to pay back the debt, the company will be liquidated and eventually becomes bankrupt. By that time, the corporation is terminated, but it has to go through a legal process. There are 2 types of corporation. First, public listed company, PLC. Shares are openly sold to the public, and shares are traded on the stock exchange. It's also known as Incorporation, or Berhad in Malaysia. Second, private limited company, LTD. Shares are only sold to a selected group of investors, not to the public, and their shares are not traded on stock exchange. It is also called Sendiri and Berhad in Malaysia. For both public listed and private limited companies, shareholders may not lose their personal assets if the company is insolvent. For corporation, there are some advantages and disadvantages. About the advantages. Compared to sole proprietorship and partnership, owners of corporation have limited liabilities. Shareholders don't have to pay for the debts of the company by using their own money. It's easy to raise capital under corporation, because corporations can raise capital from the public. Continuity of the business, regardless of an owner's withdrawal or death. Even the founder passed away, the business would still continue to run. Ease of ownership transferability. If you buy the shares of the company, you become the owner of the company. One day, if you are not happy with the performance of the company, you may just simply sell the shares and walk away. You don't have to go through any legal process for transferring the ownership. Managed by the professional. Corporations would have sufficient fund to hire professional people to run the business on the behalf of the shareholders. About the disadvantages. It's complicated to form a corporation. You may need professional assistant to help you on this. You may have to meet certain criteria before you can start a corporation, and the waiting time for approval is longer. High organizational cost. For examples, you will have to pay the professional people to work for you, and you also have to pay the auditors for checking your company's accounts. More regulations to comply with and lack of secrecy. Corporations will have to comply with many rules and regulations, as well as the laws of the country. Corporations are also required to disclose the financial statements of the company to the public. That's why it could be hard for the company to keep their trade secret. Alright, that's all for this video. Thanks for watching. See you in the next one. Bye.